Hello, this is InTheShares Mr. Create.
And I'm Mr. N.
And Mr. Create.
Uh,
and Connect. I'm sorry, Mr. Connect. I'm Connect.
As always,
Yes.
Mr. InTheShare is the one-stop solution channel to provide business model, market analysis, and quarterly report summary for your investment decision. So, what did we bring this week? Today's pick is
Shift Technologies.
yes.
It's currently taking over, Western US
Yes.
used car industry.
E-commerce industry.
E-commerce
Yeah, and
industry.
this is supposed to be disruptor company, and a lot of YouTubers are making video on this company. So we decided to go ahead and do our research for you. So starting off with Mr. N.
Okay. Yeah. So it's a used car e-commerce platform, and it was founded in 2014 by George Harrison and Toby Russell. It was listed to Nasdaq by a spec company called INSU, and it was a spec for established by IAC, and then it was then listed to Nasdaq in last October. So their business model is to invest in services that benefit the customer throughout their car ownership life cycle using the technology, so that they could continue establish long-term customer base return for future transactions. So what they do, so how they do is that they first provide AI recommendation of cars which went through 150 plus points inspections, and they also provide a test drive for the potential customers. The cars could be loaded to the desired places of the customers, or the customers could visit the so-called hubs in Los Angeles, Sacramento, and so on for their test drive. And using the online platform, it could be either PC or application. The customers could purchase the used car using financing options. And also during their ownership period, they could receive the vehicle maintenance and protection plans via this platform. The business platform, the model for the used car is that, yes, I will make a point on that later. Is that they need to purchase the used car at a lower price and then sell it to their customers at a higher price. So what they do is that they source the vehicles from consumer sellers using their AI and machine learning model at right price, and then sell it to their customers at a higher price. They are able to do this by providing immediate quote and e-contract, and also cash transfer used in their platforms. And their vision is that they want to build modular and scalable marketplace and logistics platform, so that other used car dealers and sellers can leverage their platforms. Oh, and I added the SoFi cycle, the business model cycle, because it was quite similar to what Shift Technologies is targeting. And finally, their competitors are categorized as follows, and they are mainly large national car dealers and used car dealers with e-commerce businesses, and P2P market providers, and also rental car companies. They also sell used car to their consumers, and also these companies, the companies that I'll be mentioning, is not having their business in this sector, but if they are willing to change their models to compete with Shift Tech, they could. So these companies include Google, Amazon, and also the car manufacturers such as GM, Ford, and Volkswagen. Yeah.
For market analysis, let's first look at U.S. used car market. According to Shift Technologies IR material, current used vehicle market is quite fragmented. 50% are belonging to peer-to-peer, which is individual market, and top 100 dealers are taking about 6% of market share. So for Shift, the 50% will be their target approachable market, so they can take more shares in the market. Also, if you're looking into the right-hand side graph, you are looking at the projection of used vehicle sales as of end of 2019. It seems that it's going to be increased in 2020, and I looked into the latest news, and it says that new car sales are decreasing, but the used car sales are actually increasing. Maybe this is because of the COVID, where people don't have much of income to purchase new car. So this is good market setup for Shift. Also, as Shift is concentrating in e-commerce market, I look at the e-commerce market of used car. Currently, it's less than 1%. There's less than 1% share of e-commerce within the vehicle market. So there's a lot of potential to be leveraged for Shift. And because of the used car demand is increasing, the major and COVID prohibits new car sales in brick and mortar business model. The major offline dealers are actually lost their volume, and major online dealers are actually taking their volume and increasing their market share. So if you look into right hand side graph, the black bars are Carvana, Shift, and Vroom's market sales, whereas the blue bars are traditional dealer. So you're clearly seeing that those are doing much more of a volume than the traditional. And because e-commerce is the thing, I wanted to look at what are the age groups that we are dealing with. And the left hand side, you're looking car ownership by age group. And as you can see, age of 25 to 54 are the main group. They take about 50% of total car ownership within US. So they're the key player for car trading platforms. And those same groups are the age group that 92% of the population are using smartphone. So they are technology friendly people who are willing to do the online shopping and online trading, which is good for Shift as well. And there are a lot of competitors, mainly Vroom, Shift, and Carvana are linked together and grouped together as online e-commerce competitors. If you're looking into the NPS, Net Promoter Score, which scores customer satisfaction, Shift scored at 70, but Carvana is actually at 82. The right-hand side, the Bloomberg news states that network effect for Carvana is actually much higher than the rest of two. Especially Shift is a fairly new company. It is having a little bit of a hard time taking advantage of network effect. So that is something that we should be aware of, but people are liking Shift. It shows an NPS score of 70. And I wanted to compare more deeply with Carvana and the Shift. The Carvana is actually taking most of points at the eastern coast, whereas Shift is expanding on the western coast, and the car icons are the Shift and other bubbles are Carvana. So it's quite clear that Carvana is actually taking over most of the area. I believe Shift decided to do the west coast because there's less competition. So I guess they're a smart move, and they're expecting to increase their hub in Seattle foreseeable future. Coming into this, I wanted to look at how gross profit margins differ from those three market players. And if you, as Mr. N explained, that since Shift Technology does the inspection, it takes more cost of goods sold than other competitors. So it's natural that Shift's gross profit margin is actually lower than of Carvana. It's better than Vroom, but because of those inspection fees and hiring fees, Shift Technology is having lower gross profit margin. So this is good and bad. For profit-wise, it's bad, but for their services, I think it's good. But also, we have to look into those numbers specifically because if Shift Technology is expanding their businesses, this cost may arise in the future, which will impact their gross profit margin further.
So as for the financial analysis of the Shift Technology, let's first look at the stock movement. Obviously, this was listed as the spec, and then because of the reverse and merger acquisition, it turned into the Shift as we know it today. The stock went up almost like 12-ish, and then it went down to 6.4, and then it went back up to 11.49, and then it's where it is today, $8.2, which is less than $10, the spec price. So something happened in the last quarter last year. If you look at the balance sheet and income statement, because of the lack of information as of today, I actually took the what was written in the spec sort of related document. So there are, I think it's planning. It's expected to have total current asset of $362 million because of the IPO proceeds. So this company doesn't really have that much debt as we know it, and I think it's, if you look at the Shift side of the document, you can see that this company is actually very small right now, and because with the IPO's proceed, it's expected that they are going to expand aggressively to the eastern area of the United States. So yeah, this company basically has the net asset of basically $300 million. But if you look at their revenue growth, it's been growing a lot faster. Like compared to second quarter and third quarter last year, the revenue went up by 31%. I think this is applicable to Carvana as well, because because of the pandemic, the economy went down, and probably the car transaction has gone down, but then it rebounded. Year-to-year growth, if you look at the revenue side, 34% growth, and monthly sales for this company had reached about 1,000 units per month. And every unit that they sell, they basically make the gross profit of $1,265, and they're expecting to have fourth quarter revenue of 72 million to 75 million, which is 163% growth from the previous year. As I mentioned, 2020 second quarter revenue has declined due to COVID-19, and with the IPO proceed, at the amount of $302 million, they are going to make investment to expand to Seattle area and Texas area as well. So if you remember what Mr. Connect has said earlier in the presentation, the Carvana and other companies are actually dominant in the eastern part of the United States, and Shift is very dominant in the western, and they're sort of converging into Texas area. Now this is sort of a new battleground for them to compete, I guess. Their marketing fees are also increasing right now. Obviously, they have to let their company be known compared to Carvana. If you look at the market capitalization of this company, it's at the $682 million. If you remember, they have a cash amount of $300 million. So I believe that this company is kind of cheap right now. If you think that $300-ish million will be used for the expansion, and then it will contribute to revenue. If you believe in that kind of scenario, I think this company is very cheap right now. Their PSR rate is at the 3.5 times, so I think this is like
quite
surprisingly low number. But the GP margin, gross profit margin, is only 10%, so it's not that much. It's not just, you can't really look at the PSR only. This isn't technological company, so this is where this company is at right now. If you look at the stock ratings by Wall Street Journal, they are thinking that the average price is $14. So you get to make your judgment. Some people think that it should go down to 7. Some people think it's 20, median is 13, average is 14. So yeah, you should make your own decision. But I'm thinking that I think this company is basically, if you look at the financial side of it, what they are going to do with $300 million proceed from IPO, and if they are going to use it in a profitable way, then this stock price will, I think, go up. So this is it for my part. Always the awkward ending. But yeah, so I think to make conclusion, I think this company is too early for us to make any kind of judgment.
Yes.
But depending on what they do with $300 million, this company can actually be something close to Carvana. Carvana is like such a big company. Yeah, it's like $1 billion company compared to this company being less than $1 billion. So it's only a startup company, but
I think it's smart for Shift to focus on the western part because it's quite an empty area, and as Mr. Create said, they will move to the Texas, and they set up the better frontier right there, and just take the market share.
So, and one thing that I think is that this market is very fragmented. So I think that's where shift technology can actually gain their market share.
Yes.
So yeah, so you should make your own decision, I guess, regarding the shift technology. All right, this is it for our part. And please subscribe to our channel.
Bye
Thank you.
bye.
Bye. See you next week.